Anybody? Hello? Oh, John. Hey, how are you, John? I know today is Saturday and in the evening, and not expecting a lot of people here. So, but there was a couple of requests. So I said, okay, I'm from this weekend. I'm gonna start, little by little, again these training or teaching webinars about the harmonic patterns, Elliott waves, and SNR levels, and all that. Because my old webinars are very old and they are gone back, behind a lot of webinars. So people are having a hard time. So I'm gonna just do it one by one and then categorize them and then put them in the different folders. So anybody wants can refer to them quickly. So how you doing, John? Good. I'm doing okay, man. Okay, I don't know who else is there. I know it's late. It's not the regular time. I wanted to do it at 4 o'clock, but I said, okay, no problem. Oh, you okay? All right, yeah. I have some more Johns too. I don't know, but I know, yeah, two of you. Okay. So how are you doing, the other John? Are you okay? All right. All right, so let's get started, man. All right. You see, this subject is never ending, believe me or not. If I start, I can talk 10 hours, 20 hours a month. This is a long subject. Okay, but that's why I said, the name of this webinar is basic. Just gonna give a hint what the Elliott is all about, and then open up a little bit later on in different webinars. All right, so let's get started. This is the diagram that I made. This is my own diagram. Nobody else have it. But this is what I'm showing here in this one. I'm not going to cover. I'm just showing you a little bit that basically remember that these two studies, people think they are different things. Elliott wave is something else, and then harmonic pattern is some other stuff. No, they're not. Basically, they are the same. And harmonic patterns are the name of the patterns which Elliott waves are making. Okay, basically it is Elliott wave, all right? But in a certain way, instead of counting in terms of Elliott waves, once the waves are finished, and the way they are finished, they are named. Somebody named them, a pattern, and then a specific name. That's it. Okay, just to make things easy, you can say, if it is easy for someone. I don't know. Other than that, they are nothing else. Harmonic patterns are nothing else but Elliott waves. So this is the diagram that I made just to show that, okay, this is harmonic pattern, and look what basically within that pattern you can count the Elliott waves. This is what Elliott waves do. Okay, so I will cover this thing when I cover the harmonic patterns first, and then we will go in detail about this. So let's start with the Elliott wave first. What are the Elliott waves? Okay, so Elliott waves, the idea is that when you have, for example, there is no news out there and no big deal or nothing about, let's say, for USD, American economy, it's just normal interest rates, and you're not, are dropping or raising. The economy is fine, and no big news. Bottom line, no big news or anything, or should I say, no catalyst or push or force to push the price. So once you're sitting somewhere, right? Somewhere, for example, price dropping here. For the sake of this example here, I'm going to tell you that suppose the price were dropping for some reason, and all of a sudden there's a big support here, right? So we come and we sit on the support. for a couple of days, right? Day or two, sitting, and then all of a sudden you have a very big news about something, maybe NFP or FMC, something that are really off the expectation, better than expected or worse than expected, big time, and in other words, a big reason to move the price, either up or down. Okay, so if let's say the price were dropping for some reason, maybe an impulse wave or maybe correction, and find a support and then stay there, all of a sudden a big news breaks in, and then we will have, we call it an impulse wave. Impulse means that you have a reason on and you react impulsively on something, on some kind of news, and then everybody reacts at the same time, right? Everybody see the news, they're waiting for the NFP, who doesn't wait for NFP? So the whole world is waiting for it. And then as soon as it comes, then much better than expected or something like that, big numbers, and then USD gets strong, and all of a sudden you see Euro USD start jumping, right? Or if USD, bad news for USD, and then Euro USD start jumping, right? So the prices start moving to the upside. And then obviously you have to have a target, and the target is usually last highs or low, whatever, big resistance. So the price goes over there, and whoever makes the entries in that move, impulse move, news on the move on the news, are in profit. So at around the resistance, they will take a profit. Okay, they say, okay, we could make good money, and then we are reaching to a target, and we may rebound from there, and we're going to lose all the profit we made. So let's take the profit and close the trade. So they're going to close a lot of trades, right? So at that resistance, which is usually, is calculated, the way I always show you, some, old SNR level, or trend line, or channel line, or some fib number, right? Usually it's an old SNR level. Okay, the SNR weekly levels, weekly, monthly are the key in this business. So the price goes back and hit that number, and just before that, people start closing their trades who are in profit. So guess what? Then you start seeing a pullback. Okay, because a lot the push, the force is going away. The trades are getting closed, right? So you see a little pullback. Okay, you will see a pullback, and that pullback usually comes down to, those numbers, right? 50%, 61%, 78%, something like that. And you make, different patterns when you're coming down here. Usually you come down in 3 waves, A, B, C, but not necessarily. You have to judge, what the price is doing. Okay. It depends on the news. Okay. If I go in detail, it's going to be a long webinar, but, I'm going to just go, touch the basis, right? So if it is a big, huge news, then you will go very fast to the upside. A shallow retracement, maybe just a straight one line. You're not going to see, A, B, C correction or something like that. And then all of a sudden you will see a big burst to the upside again for wave 3. But if the news is good, but, it's like a moderate, okay? It has a reason for the price to go up. So the price will go up, then they will come down a little bit, right? Then the buyers will go in again, and the seller will come down. So, and in that situation, when the news is like moderate, you will see A, B, C correction, which usually is a Gertley or a bad pattern, which is a harmonic pattern, right? Let me show you, side by side, so you will have more understanding about those things too. I didn't open that. Let me. Okay, let me open those real quick. Excuse me. For example, when you're doing that, where is that chart? I don't see it here. For example, this one, so when you go like wave 1, and then you come like this with A, B, C correction and makes a girdle. This is like a 61%, and then 78%, right? So you make something like that, and then from here, if the, like I said, if the news is very powerful, then you will see it's just a straight, 61% pullback, and then poof, goes all the way to the upside. No Gertley, no bad, no harmonic pattern. But if the news is moderate, you might see then it goes to around my favorite line, there were 23%, and then drop to 78%. And if this one is 50%, then this one is 88%, then, we're going to start the harmonic pattern, which I don't want to do right now. Okay. So it will make some kind of Gertley, if the news is some kind of, harmonic pattern, and then goes for wave 3. So basically, this harmonic pattern is Elliott wave 1 and 2. The wave 2 is either, it's a retracement patterns. These are the two, Gertley and BAT. Okay, they are the retracement patterns, and they are in the Elliott wave. They are the wave 2, number 2. So let's go back to our basic thing. Let's see this one here. Okay, so this is like wave 1, and in wave 2, this is what you'll be doing, making small, maybe a Gertley pattern or a bad retracement patterns, either one of them, or maybe not, straight, pullback around 61%, and then all of a sudden you will see a big burst and you go for wave 3. What happened is that the first time that the people got in here, they take profit, but they're taking a second opportunity. They're looking at it, right? And then at the same time, the sellers are skeptical now because they see that, man, there's a good news, this pair is bouncing, and it may not go down anymore. So they go in here a little bit, but they're very skeptical, so they get out right around this area, and then the buyer will come in again. And the buyer will see the opportunity, and then when they come in this area, what happened is that the sellers, which were a little skeptical, now they're 100% sure that we're not going down, we're going up now. All right, so they come and join right around here. And that's why then you have the wave 3 is so powerful and so momentum. It's always 1.618 of wave 1. That's the normal calculation. It could be more or less, but if it is less, then it's not wave 3. It's wave C of a correction. Well, when I get to the correction, then I'll tell you. But if wave 3, impulse wave 1, 2, and wave 3, wave 3 is usually 1.618 of wave 1 because of, the news is very good. And then, the buyers come in who were waiting for that news. They came in big time. They took the price to the upside. The sellers got shuttered, says, we got a problem here. Some losses, some closes, break evens or whatever. And they're skeptical now. Taking profit here will pull back. The price will pull back at profit taking here from the buyers. And then the buyers will come in again because they know now that, price were dropping, but now that the news has changed the direction. The news is, in favor of this pair. This pair is going to go up, so they will get in again. And commonly we have those Fibonacci levels, so they get in. Or maybe some, pivot point right around the corner, or some SNR level. Okay, these are the three things. There is nothing else. Remember always. Okay, and they are all interconnected. Okay, I don't want to get into that right now, but they are all, the SNR levels are the one makes the pivot points. Okay, pivot points is not some other different calculation. No, those are daily SNR levels. Then you calculate them, and then you pick S1, S2, R1, R2. Those pivot points are also these SNR levels. And most of the time, when you pull the fib, it comes around those SNR level. So you have the SNR level and the pivot, or maybe pivot point, or a fib level right around this, 61%, whatever. Then the sellers will get away, and then the buyers will come in, and then the seller will come and join right around here. So we break this area and then fly big time, and goes for the target is again 1.618 of the fib or of any SNR level or big level right around there. Sometimes what happens is that there is a big SNR level right around 1.786 or 200%. So the price will just, if the news is good, big, the price will continue to that level. Okay. So right around here, what we need to do is that you need to go trailing stop. 20, 25 pip trailing stop. If you are in a good profit, you just go trailing stop just in case that if it comes back, you lose, you miss 20 pips, that's fine, but you take a chance of getting some good pipping. If the news is not that good, I'll suggest that you take the profit around 1.618 or just below that. Then, a little bit before, just get out, okay, and then let it retrace. Because after the wave third is finished, it will retrace. Now, you see the notice here, we're going to just discuss this wave one, right? Okay. So you see this count, this black counts, wave one, wave two, wave three, wave four, and wave five. And then you have a bracket, wave one. So every time frame is making the Elliott wave. Every time frame. Okay. But sometimes they are visible, sometimes they are not. They are so complicated that a naked eye cannot, or a fresh eye means a newbie eye, experienced eye will see it. But sometimes a lot of people can't see it. So for example, this is wave one, but this is also wave one. Within wave one, you see 5 waves, and then wave 3, I have another 5 waves, and then it's wave 5, I have 5 waves, right? Mention it. It's blue count. 1, 2, 3, 4, 5. Here, 1, 2, 3, 4, 5. Wave 5 is from 4 to 5. This black count has the blue 1, 2, 3, 4, 5. So what does that mean? These 3 waves are impulse, which also have 5 subwaves in it. Wave 1 have 5 waves, wave 3 have 5 waves, subwaves, and wave 5 have 5 subwaves. Okay? And these two, wave 2 and 4, these 2 waves are corrective waves. After wave 1, impulse wave, profit taking, you have a correction coming in. Then you have another impulse wave, very strong, wave 3, and profit taking, and then you have a correction coming in. And then you have another push, final push to the upside, wave 5, and then this impulse wave, because of this particular news, will end up. And then this whole thing, since your phenomena is 5 wave and 2, 5 and 2, remember 5 wave and 2, 5 impulse, 2 correction, 5 impulse, 2 correction. So if this, for example, this blue count is in 15-minute chart, you see 1, 2, 3, 4, 5, but on a 1 hour chart, this whole 5 waves on 15-minute chart will only make wave 1 on an hourly chart. Okay, and from there you have a correction coming in. You see on a 15-minute chart ABC, but you may see only one straight line on an hourly chart, which will be wave 2. So this whole thing is going to be wave 1, wave 2, but then you will see on a smaller time frame, you will see 5 subwaves going to the upside and 3 subwaves coming down to the wave 2, right? So wave 1, wave 2. Then again, wave 3 on an hourly chart, wave 3, you will see 5 subwaves in it. 1, 2, 3, 4, 5. So 1 hour chart will make wave 3. Then you have ABC correction. On a 15-minute chart, you can see them ABC, and the 1 hour chart will finish this wave 4, right? And then again for 1 hour chart, the last wave, wave 5, you make wave 5, right? And also 5 subwaves in it. So this is how 1, 2, 3, 4, 5, and we make 4 hour chart wave 1, which is in the bracket. This is going to be only wave 1 on a 4 hour chart or a daily chart, higher time frame. Okay. Similarly, when you make 5 waves on a 4 hour chart, that could be only wave 1 on a weekly chart. You understand? Any difficulty grasping this phenomena? Johns, how are you? Is it clear? Complicated? Any feedback? Clear? Okay. So This is what the basic, phenomena of Elliott wave. You have 5, 2, 5, 2, 5, 2. Okay, 5 waves going upside, and then ABC. Well, you can say 3, ABC, actually, not 2. 3 wave, 5, 3, 5, 3, 5, 3. And then once you finish this whole wave 1, like here, so wave 1, ABC correction here, right? Okay, so if this whole thing here with the bracket wave 1, then we need ABC correction for this wave. So now we are coming down on an hourly chart. You see wave A, B. This is going to be like for example, this was an hourly move, right? And this is a daily wave or a 4-hour wave 1. Then we need to come down for wave 2 on a daily or 4-hour, but it's 3 wave like here, ABC. So this ABC. Now understand this, or make a note if you want, that this ABC correction, this is in 3 wave, right? So a lot of people say the correction is always in 3 waves. Yeah, fine. The correction is in 3 waves, like A, B, C. But the wave A and the wave C can also be impulse wave. Means they can have 5 waves in each of them. Okay, impulse wave, 1, 2, 3, 4, 5 here, ABC correction, 1, 2, 3, 4, 5. That correction can be 3, 3, 5, or 5, 3, 5, or 3, 3, 3. Any combination. But it will drop in 3 waves. So most common thing is that 5, 3, 5. The one, with my experience, is the correction comes in 5, 3, 5 or 3, 3, 5. The C usually comes in 5 wave anyway. So out of the correction waves, 3 ABC, 3 corrections, you have A and C also. You can have impulse. Okay. Now, there sometimes, if the thing is, John, like I said, I explained you in the beginning, that sometimes they are very clear, and sometimes they are very, very complicated. They are there, but it's very hard. So, my approach always, if you see that harmonic pattern, and a lot of people say that, Sam, if this is not touching the 7-8%, is it still Gertley? Gertley means that it touches 78.6%. If it doesn't touch, you cannot call it Gertley, but can it play out? Yes, of course. It is something like that. The Gertley is not that somebody created in the market must follow that. No. It's right around. There's just an idea of, some kind of pattern, and this something like that, like M or W, simple. It can be crooked M, crooked W, or very straight, nicely drawn M, or nicely drawn W, right? So that's what it is. And, extended M, extended W becomes, bad, butterfly pattern or crab pattern. But, yeah, usually it's like bullish is M and bearish is W. And but the calculation can go off, so you have to judge what is exactly what's happening. Like I said, if the news is very good, you may not see retracements, very shallow retracements, and they just move on. So if you try to see perfect drawing on the charts, you may not see them. For example, let's go back. I'm going to show you something that is cooking right now, because I love to be. I haven't opened a very, very good charts because somehow I got busy even on Saturday, man. So. But for example, looking at Euro USD, I don't see wave 1 or 2 here, right? But I see if this is a very, very powerful wave 3 here. So I just said this has to be wave 3, and then after that you have wave 4. So we have the correction here. See, wave A, B, C, right? And this is finishing wave 4 correction. But where's wave 1 and wave 2? I don't know. So this could be wave A, and then A, B, C, B, but where's C? There is no C, right? But if you consider this, okay, this is wave 3, it's before, and then 5 could be like that. Yes, 5 could be truncated. I mean, less than this, or just if you see that the prices is stopping and they don't want to go and there is something else. But see, this is a weekly chart and monthly chart is showing you something that, it may be stopping here. That's why I made, well, I'm showing you the wrong chart here. Which chart is this? Oh, so that's why I made this chart here. And also because of the fact that USD, index was trying to make or doing the same thing, but the opposite way. Okay, let's see, for example, if I was actually posting somewhere, so luckily I have those charts open here. So where is, oh, here. Okay, so see here, I don't have written here because that's another chart. This is one of those in the public, so I don't have all those wave count. But this is wave 3. I said this is wave 4. This is the end of, this is wave 3. This is wave 4. And then wave 5, just above wave 3, finishing. And after that, we're supposed to come down here, ABC correction, right? But ABC, first thing we need to drop, and I just showed you that A could be an impulse wave and have 5 waves in it, right? So if you look at this, keep moving that chart here. This is this big wave 3, and this is wave 4, and this big wave 5. The correction is not ABC, it's not correction for this whole thing, right? It has to be big, right? Down there. But what is it that is coming down here? And I said this is 1, 2, 3 or ABC correction. This is ABC. It's not ABC. It's 1, 2, 3, 4, 5. This will be wave A of the correction, an impulse wave, which is, by the way, if it is in, so far, this is what it's doing, right? Exactly that, the way I made the diagram. So how come? I mean, I know all this thing. I have a crystal ball that I know 6 months ago that, this would happen. No, all I know is about that. Some, little bit mumbo jumbo of Elliott Wave. That's all. I made this chart based on Elliott Wave that, okay, if we're finishing here, if this is wave 5 is finishing here, let me open the real chart with the counting and everything so you guys can understand. Man. Okay, hold on just a minute. Let me get this chart, the real chart, then I. Where did that chart go? Oh, that one, I don't know. But here, see, this is the monthly chart. This is where I'm showing this. See, with this wave 1, wave 2, big wave 3, drop for wave 4, wave 5. We're coming down here for wave 1. Okay, this is wave 1. We need to come down here. Then we will go for wave 2, make a head and shoulder pattern. This is very, calculated and very, very head and shoulder pattern. I'll come back again. Oh, this one? You talking about this, John? This shallow correction for wave 4? Okay, now let me explain it to you. There's a law or a phenomena or whatever in Elliott Wave. It says alternative correction, alternative correction, or alternate correction, something like that. What it is that if you have a fast drop in wave 2, then you will have a triangle in wave 4. And I don't know what do they call. I said I quote you something wrong, something. But this is what it is. If you have sideway correction on wave 2, wave 4 will have a sharp drop. If you have sharp drop or 61 or 78% drop on wave 2, you will have a side wave correction or triangle maybe on wave 4. Okay. Now your question, let me explain it to you. This is wave 1, 2. This whole thing could be wave 3. Okay, this we don't see here. Like I said, sometimes on a shorter, higher time frame you can't see it, but could be this. Maybe there is wave 1, 2, and this is wave 3. This is wave 4, and this is wave 5. We're finishing up wave 3 of this blue count, and then we drop for wave 4 here, and then we go up for wave 5. Yeah, that is also a possibility, right? But either way, what my thing is that if this is wave 3, we need to come down for wave 4. If this is wave 5, we need to come down for wave A. Either way, we need to come down, right? So if we're coming down for wave 4, for let's say a triangle, so it has to be coming in 3 waves. If it's now see the problem is that if I start triangle thing, except that if you don't know, you get confused. So triangle also, just give you a brief touch maybe. So see, this is something like this. It's a triangle. And if we're going to be dropping, for example, this is, wave 3. No, it's supposed to be staying there. So we see end of wave 3, then we will be coming for wave A right around here like this in a 3 wave. Then 3 wave goes, the triangle has 5 legs in it. So either way, for even this one, we need to come down here for wave A. And we need to come down here for 1, 2, 3. Usually this is equal length, right? 1, 2, 3. But are we having equal length here? If I go the light, no. Let's open forget about this chart here. So every time you see a lot of people, if you probably saw a lot of people talking about Elliott Wave is a very subjective thing. It's just one person can see it bullish, and then at the same time the other person can see it as a bearish count. Right? They can count it. But, you got to use a little common sense. And that's why in my trading, I use different things to come up with, solid, confirmation. Yeah, you can see both. But if you add some other studies into it, then you can clearly call one of the study false. Okay, no, it's not bearish. It's bullish because of this fact. Okay, that's why I have my indexes coming in, because what index is supporting. Fine. If you have a bullish count and a bearish count, but index is not, supporting bearish, index is going for the other direction. If it is clear in an index, then your bullish count is fine. That's how it is. But here, what I wanted to show here is like this. Where's my other? Oh, here. Okay. See, now notice that I have written here 1 or A, 2 or B, and C or 3. In fact, I had here. I had I don't know my chart. I had it here like 3 instead of the 3 and 3, and I mean C or 3. But I think I removed it because we are exactly at point of C. C, why C? C, if it is the correction A, B, C. And then we continue go to the upside. C correction means for this move, for whatever reason, if it is Elliott Wave or not, you have to be prepared for all this time. But right now, for the sake of Elliott Wave, what I'm trying to explain here is you have to be open for different scenarios, right? So this could be wave A or 1, 2 or B. Now, if we are coming back for big wave 1, or A correction, even wave A is impulse, right? It can have 5 wave, right? 5 wave phenomena similar as impulse wave, so, which will be 1, 2, wave 3 should be around 1.618. This is where I marked here, right? So, and look at this last candle. What do you think? We're going to come down here? I think so. See, after this big, powerful candle, we drove this much down. Again, this is a very powerful candle. This candle here, with a little bit of wick, still sent us down, right? This is almost no wick, and then we came. This is completely no wick whatsoever. All right. So I think 127, it will be gone very soon. Okay. Not 100%, but my experience is telling me that it is no match of this big move or a powerful black candle here. Okay, it's too close now. Okay, maybe we will open gap down below that level. You never know, because at the last moment on Friday it was dropping big time. So this is it's on the horizon right now. So this will be, I think it's 1, 2, 3. So wave 3. So we are coming down for wave 3, followed by wave 4. Wave 4 would be, now we're talking about going back to that level. So like you said, that if it is not clear, how much more clear you want, John? Okay, I have not written here every single thing, but if you open it up, you can see all this small wobbling. You see this last wave, this is wave C, or this is wave 5. You can see it's a 1, 2, 3, small wave 4, and this is wave 5. If you go on a daily, you can clearly see them. This is a weekly chart. Okay, if you go here, you see this, how nice and clean it. This is could be like if A, B, and wave C is big. 1, 2, 3, 4, 5. Let me just do some calculation for you, which I was showing, right? So if we can, you're gonna measure this, huh? And see how much is that in a retracement on that. 61%, right? Okay, drop that. Let's see how much is wave 3 of wave 1. If this is wave 1, it should be bigger than wave 1. So what is that? Okay, 1.618 is this, but this is where it, and wave 3, if you can call it this one, wave 3, this is a small one, right? Not all the way to 1.618, but it is wave 3. It's bigger than this wave 1. And then is it 38% of wave 3? This little, exactly 38%. You see that? See this 38%? And the retracement is A, B, and then C, 38%. You go on a 4-hour chart, you will clearly see that this correction there. I don't know if let me see the time here. This is 16 December 1st. Can I go back there? Probably this was the correction. Was it? No. This is 1 month. No, this is 4-hour, man. But I'm confused now. Where? No, that's euro. You see, this is. No, I'm messed up here. I'm looking at the euro years. That's why I'm getting confused. But anyway, I don't have a 4-hour chart here open for this. But when you open it up, you'll see very clearly that this is wave 4, and then wave 5 usually is 61% of wave 3. So let's measure that and see what it is, if it is 61% of wave 3. Okay, so let's say, for example, here, and then go here, and the third one goes at the end of wave 5. Okay, so 61% is probably, yeah, it is probably right here, because I don't have this on my tool right now. This is a 50%, and this could be 61% here. This is 100% actually. So this is around like 61% or 0.707%. So yes, wave 5 condition is also fulfilled. Wave 3 is a little bit shorter, but from here, wave 1, wave 2, wave 3, wave 4, wave 5, they are very, very clear. Okay, and right after that, you have wave A. If you open it up, you can see it's wave 1, 2, 3, 4, 5. Easy. Again, it's a daily. This is, okay. And this starts when? 16, December 30. January 1st. Okay, this is a daily. No, I don't want to mess around with that chart. Oh, the heck. Let me open it up. New one. 4-hour plan. Okay, now we need December. Okay. You see this? It's coming to wave A. You can call well, it's not exactly 5 wave count, but I would say wave one, wave two, ABC, and then this is wave three here, wave four, and then this is wave five, and then you have a correction ABC, sideway correction, wave B, and then you go for like small wave one, two, three, four, five, wave C. Then again wave one, two, then three, side wave, this little sideway wave four, and small drop wave five. Then again, it's constantly doing same thing again and again and again and again. Okay, so oh man, okay, I don't know what happened here. Okay, anyway, so now you understand, and this is how it constantly do these things. So that's why you can see here, if I have this harmonic pattern drawn here, not the Elliott wave, no, on the other side I have, right? So this is, again, this chart is, where's the other one? See, I'm going in one place and then losing the other chart. Oh, wait, this one. So this could be wave 1 or A, 2 or B, 3 or C. So this is how we're going to come down, and probably we're going to be, you see this, the one we're doing is probably this wave 1, 2, and 3 only. All right. Then we will go up a little bit for wave 4, and then come down for wave 5, and that would be probably down around, okay, if we come here for wave 3, then we will go for wave 4 here, and then we will come down for wave 5. You know where? There. This is the big trend line going on too, right? So for wave 3, somewhere here we need to come down. Then we wave 4 and we wave 5, nice and clean, we will be coming and touching the TL. And this low here probably. But maybe much lower than that. Maybe this one here. Maybe not. Let me see. Let me see from here. I'll show you. Okay. Let's take a look here. It's a very small area, but okay. Now 1.618 is coming right here. 9260. Okay. From this. So this will be wave 3. 9260, right? Okay, now take this out. Oops. 9260, remember. And then we measure for wave 4. 38%. So we get a 9260. Right here. Okay. And if we come down here, then 38% is coming to 98.15. So 92.60, 98.15. I'll forget some. I'll write it down. 98.15 and 92.60. So we got the wave. At the end of wave 3, 92.60, and then wave 4, 98.15. Then we need 61% for wave 5. Okay, let me go again. So 92.60 right around here. And we will put this on 98.15. Right here, okay? So this is going to be, see, wave 3, then wave 4, 38%, which is, see, this low here, probably that's the one with the target. And then wave 5, you see that, as I said, normally it goes to 61%, but 50% is also fine. So this 50% is coming exactly at the tier for wave 5. Okay, so if I want to draw here, this is what I do, and this is how I come up with all this, long-term analysis. So, I play around with this thing like that. Now you know what I do. Okay, this is wave 3. And you know what? I don't know what am I doing here. I'll make it yellow. It's more visible. And I'll try to take this one out for now. Oops. Has to be exactly okay. So this, see, this wave 1, 2, this is wave 3, and then what did I do? Oh, I got it. I got another one, smaller, right? Four, and that's the idea. You got it? So when I do the calculation, this is how it is coming out. This is our wave 2. And this is our wave 1. Okay. Now, excuse me. So this is 1, 2, 3, 4, 5, right? This whole thing, after 5 big blue counts, let's say we have wave 1 here. Whoops, what did I do here? I used something else rather than the text tool. Make it black. Okay. So if this whole thing, even though this chart is a monthly chart, we don't even have a bigger chart, but I'm just saying, So this wave 1, 2, 3, 4, 5. This is wave 1, for example, and I'll take out this fib from here. Forget about that. But then, if this is wave 1, then we need wave 2. And we need wave 2 to the downside. So we will measure this as wave 1. Okay. And we look for wave 2 around 61%. Common sense, right? So this is how we need our wave, this wave 2, which, it's like it goes up and down, maybe 50% bounce, or maybe come down to 78%, but most of the time it's 61% for wave 2. So if we get here for wave A, then we bounce 61% of this, or 38%, sorry. If it's a zigzag correction, usually zigzag means a B wave, a middle wave, is 38%. Okay, and then C wave is equal to wave A. So let's say 38% of this whole thing. Don't move too fast, bro. Okay, now if this is wave A, then we need 38 for B. If this comes around this white band, that would be, I don't think so, but let's see. If this is wave 1, right? I mean A, no, this is not coming right band. This is coming exactly where our last wave 4 was. which is very common. Okay, this will become a resistance, right? So when the price bounce from here, it will go 38% exactly where the last waveform. So let's say 97, 94, let's say 98, for example, 98. 98 would be wave B. Then wave C would be where? And it should be equal to or 127 or 1.618 of this wave 1. So wave 1 is, or wave A is from here to here. And then wave B would be, we just saw it as around 98, right? So let's see, using this tool, if we get here, right? Why is that? Oh, okay. And then we put this white thing here is around 98, which is this, right? Then, you see that, John? No matter what, if you do it properly, you will be amazed. See this? I just keep telling you that if wave A in a zigzag, wave A and wave C should be equal. So if we need to come down for wave 2, around 61%, look where is A equal to C is coming, 100%. Exactly, almost there, almost the same area. This is coming 76.30, this is coming 78. On a monthly chart, 100 pip difference means nothing. This is the same territory. Let me just bring, here we go. You can see now clearly that wave 2 for this is completely different tool, by the way, right? Wave 2 for this, and this is my just estimating, maybe I'm just off a little bit here. There is no level here. I'm just, calculating and then writing down and then putting those numbers there. But if it's 1, 2, 3, 4, 5, wave A, then we go for A, B, C correction to last fourth wave. For wave 4, for wave B, and then drop for wave C. Then we will have A, B, C. A, B is equal to CD 100% right around this area where wave 2 is supposed to be finishing. So this is what all this calculation is all about, and then you just you said that they're not clear. They are clear, but if you know exactly how to look for, what to look for, then they are clear. They're not hidden. The thing is that sometimes they are so complicated that an expert cannot see it. So forget about it. That's why most of the time a lot of people say that, man, Sam, this is X, Y, double X, Z. So forget about this nonsense. If it's clear, follow that. If it's not clear, leave it. If it's not Elliott wave, look for a harmonic pattern. If not, then just look for trend line support, resistance, SNL level, and trade that. Don't force something which is not there. We cannot force the study there. That this must be this and this must be that, or no. If it's not clear, forget about it. So when I see that, okay, so 1, 2, 3, this could be wave 4, but like you said, John, that this could be not wave 4. This is wave 3 probably, and then this could be wave a 4 triangle maybe happening here or going to happen here. So let it happen. If we come down here, if we don't go below this wave 4, could be, and it start going to the upside, then I'm going to have to change my scenario. But am I going to get hurt for what I'm doing now? No. For wave A, it's, it's supposed to come down. It's coming down. So, I'm making my money as long as it's there. So if, you come up with the two scenarios, either way, whatever the scenario will play out, you're fine with that. If it is wave A, I'm fine with that. If it is wave 1, I'm fine with that. Either way, we need to come down here and finish somewhere down here. Right now, we are coming down very powerfully, so we're not going to finish soon. Not next week, no. Unless there's some big news in the opposite direction, which I don't see happening. So this could be easily 1, 2, and this is wave 3, and we're coming down here. So this is how you count step by step. Don't try to, I go ahead and make these charts if I see that either scenario gives me the same thing. For example, if it is a correction, dropping for wave 4, ABC, first leg, wave A, B, C, D, E, 5 legs of the triangle. For that purpose, we need to come down in 3 waves. We are coming down, if it is that. Or if it is wave 1, 2, or 3. Now, this wave, end of wave 3 will decide what it is. Okay. All this time, I was enjoying trading because the damn thing was following my chart exactly the way it is I made, right? So when that happened, what do you need? I just showed you the USD, Euro USD, right? I didn't trade it, by the way, much, few trades. But look at this. Look at this chart and look at this chart. What do you see? It is going exactly where it has gone, exactly where I said it's going to go, right? And, USD index mostly affects the Euro USD. So, this is the beauty of this Elliott wave count. And this is the only way that you can predict the future movement. Okay, for example, if you are at the resistance, but the thing is that how many times we see resistance breaks? They break all the time. Support, resistance, they get either, respected or disregard, right? We disregard them, we break them, and gone. Either support holds or break. But so that's a 50-50 chance. Then it's a gambling, then, right? If you have a 50% chance, then you're not trading, you're gambling. The trading is that, and usually, if you notice, my style is that if I don't have clear scenario, and if there's a 50% chance on something, I plainly say, drop it for now, we go someplace else. Simple as that. You can watch my webinars. I will not touch that pair where I don't have a 90-10%, 90% or 80-20 at least. If I have an 80% scenario that this is going to happen, okay, based on all the, indexes, news, media, whatever, fundies, all those factors putting together, and my technical analysis, harmonic patterns, Elliott wave, SNR levels, all of that pointing in one direction, 80%, go with that. But if it's 50-50%, just drop it. It's gambling. I don't want to gamble. I want to trading. Trading is all calculated, solid moves. So this is what is happening right now. You see it on a Euro USD even, with a monthly chart, exactly that we are in wave, actually not in now, but wave 1 is finished, hopefully, or could be wave 3, and then wave 4 is coming in. So it's so big. Wave on a monthly chart, the chart is so big that if you have a small wave, a small correction, if you can catch that, then okay, right now it is coming down here, maybe right around here. But from here to here, several hundred pips. And then you can go on a smaller time frame and pinpoint, just like this. Do the calculation and pinpoint, and then easily, use your magic IB system and then trade the damn thing in, perfectly every single day, in and out. Okay, yeah, well, I made the chart for EU already, man. You don't have it? I thought I sent out. Maybe this weekend I'll send out. Or maybe I'm, planning to show this. Because wave is not finished, but I showed the chart that it is about to finish and what is going to happen next. What did I do? Let me show you. I should have saved this work. It's going to just go. Forget it. I'll make it up. Look, this is for the public that I made, but move down here. I have the chart made already. Okay. So once we finish that, where we going now? See my point here? It's in this band here. And the way that the USD is dropping, we may be going here. And usually, like I said, that on the monthly chart, that it usually goes back to the last fourth wave. This is where the last fourth wave here on this chart. So this is the possible target for now. Okay, and from there something will happen. When I say something will happen, is that probably news-wise, right? USD is gonna get either very strong or probably euro, and euro is right now, every day showing us a sign of weakness, because it has gone very far to the upside. Here, see this euro here. So euro is kept on, so like wave A, B, C. This is A, and this is side wave B, right? And then this could be wave C ending here somewhere, and it could drop here big time. If this drop here, then we can easily have Euro USD B wave to the downside there. Here's the Euro USD daily. What is that? Oh, okay. So yeah, this is one of my other charts. See, 1, 2, and then we're going for wave 3. Where are we going? Where is wave 3? Well, I forgot to follow this one, I think. Okay, anyway, Euro USD daily chart. I just showed you. Where is that? That was not the daily. Okay, that's weekly. Okay, so you're asking me for a daily chart. Well, weekly has a nice count here, so we're gonna be ending here, and then when the move starts to the downside, then you can go and take a look at the daily. But see, the daily is I had it wave 1, 2, and then wave 1, 2, and 3. So let's see, count that. This is an old chart. This is I just 1, 2, or A, B, and wave C, or this could be wave 3. But the thing is that we need to come down on a weekly chart. You saw that we need to come down for wave B, so this could be only wave C, not 3, because that means that we need to come down here and then go up for wave 5 to the upside, which is not the scenario our monthly chart or weekly chart is showing. Well, weekly or monthly, you need to come down here for wave B, and then we go for wave C. So wave B is right around here somewhere, right? Maybe 50% or 61%. But then this is wave 1, 2. How far we have gone here? Let's take a look. Is it already 1.618, more or less, or what? Or maybe going for 200%, something like that. Why this tool of mine is messed up, man? Where is the real tool? Real tool. Let me grab the real tool here. See, I have all these fibs made in one chart here. I can pick up any whenever I want. Oops, not this one. So now I have all the levels here. Okay, so 1.618 was here. It came touching here and then come down here, and then so this is wave 1, 2. This is wave 3. 1.618. A small wave 4, and then wave 5 is coming in. Okay, so this whole thing would be, if this is 1 or A, this is 2 or B, right? If not, this could be only wave 3, 1, 2, 3, 4, and wave 5 somewhere here, maybe on this line. So this will be wave 3 finishing, then followed by wave 4, and then we go for again for wave 5. That is a possibility is there. Possibility is there, but very unlikely. This market has a possibility of going even left, I would say that. Okay, whatever you think that it will do, it does the opposite, right? So the possibility is there, but very unlikely. I think this is wave C finishing here, or wave A somehow, wave 1, 2, 3, 4, 5 of this one. But see, this you have a wobble here. This is 1, 2, 1, 2. So this could be 3. 1, 2, 3, 4, 5. Or maybe this is the end of wave 5 here. 1, 2, 3, 4, 5. And that would be ABC. And followed by, again, a down move for wave B. And it would be right here. See, if we end up this wave 5, whatever. See, this is wave 1, 2, and 1, 2, 3, 4, 5 here. The problem is that this cannot be a corrective wave. This has to be, unless this is some kind of nasty correction and a triangle or something. That is it's a possibility that this count that I have here is not the one. It's not the correct count. and maybe this is like A, B, C. Okay, fine. This is only A. Then we have this wave B, and then the C waves coming up, which is A, B, C, something like that. That's what I'm saying. This Elliott wave thing is very complicated. Once it's fall into, especially like a triangle like this, very hard to understand. But again, I was trying to show you this just a basic phenomena today. We can get into the triangles. Triangle I can show you simple, like this is the very simple version. This is contracting triangle, which happens 80% of the time. But these are different type of triangles. This is like ascending triangle. This is descending triangle, right? And this is the one that I just showed you. So contracting triangle, and this is expanding triangle. So these are different triangles. They happen most of the time, 80% of the time in wave 4, and 20% of the time, sometimes, very sometimes, in wave 2. Wave 2 is usually a zigzag or a flat. But back to this again, the basic phenomena is this: wave 1, 2, 3, 4, 5, followed by A, B, C correction around 61% or 78%. If this is 61%, you go up, you come down for 78%. What happens? We call that what? A Gertley pattern, right? And we just had one for the opposite direction, but we had one. Let me show you. See, this is, if you learn that, you can take advantage of it, like I did, and I showed you guys. It's not that I'm taking it alone. Okay, I showed it in the webinar, and I showed you, ahead of time that this is what's happening, and do it. And I had 2 trades out of that chart. Big one. Where is that chart? Here. Look. Just the opposite. This is 61% pullback. Then it comes back to 23% line. Not touching it, but very close. It went up to 78%. And that's what. And I even made a video on that. That's saying that, actually I was expecting that it will drop, but it went up. Why it went up? Remember the video? It is on the website. You can see on my channel that why Euro Aussie went up, right? So if this is the reason why, I explained that this is a possible Gertley. It went up to make a Gertley, and then it's going to drop. And then this is what happened then. All right. So now you know that if I'm showing you this trade, it is not a fluke or anything. It is based on a year's experience and all this knowledge that I have. What is Elliott wave? What is these patterns, and what to expect? When I'm expecting something and I'm, if that is happening, I'll jump on it. And then I got 100 pip here, and then constantly going, and then another trade down there, which was this one, So it's easy. If you learn and you understand, this is how beautifully it's been played out. So if this is wave 1, and this is wave 2, imagine this is wave 3, how far it's going to go. And now if you notice that this is small wave 1, 2, 3, small wave 4, and wave 5, right at this support and holding, guess what? If whatever it is, if it is A or 1, it will correct. 50%, 60%, something like that. So we go back and we start measuring that, and then you see that, how far it's going to go. Maybe this is the one going to stop, this low here, or some other weekly high-low level or whatever, I haven't done that right now, so I don't know. I'll do it, and then for tomorrow webinar. Tomorrow the market recap, Sunday evening, 4 o'clock, right? So this is how, little by little, if you pay attention, it's not a one-day study. Okay. So remember this basic phenomena. I said basic Elliott wave. This is wave 1, 2, 3, 4, 5. Wave 1 and wave 3 and wave 5 are also impulse and have 5 subwaves in it. And wave 2 and wave 4, these are the corrective waves, and they are 3 waves: A, B, C correction, A, B, C correction. Most of the time, wave 2 corrects either zigzag or flat, most of the time zigzag, and wave 4 is most of the time triangle. Let me just show you something else real quick. I don't know where it is, but I will try to find it. No, maybe one. What the heck? Let me. Okay. I don't know. See, this is how it is. This is Elliott wave, head and shoulder, harmonic patterns. Where they are. I'll do it in the next time. I'm gonna close it because it's 7:11 now. 1 hour, more than 1 hour, right? But this is we're gonna cover next webinar about Elliott wave. The next step. That this is wave 1 and 2, either bat or crab right here. Bullish bat, bullish crab. Then you go for wave 3. Then you make a butterfly pattern or a crab pattern, which is in between wave 3 and wave 4, wave 5. Then coming down, this is 1, 2, 3, 4, 5 finish. ABC correction required now. Then you're coming down and you make a bearish Gertley or bat pattern between wave 5, A and B. That also makes actually our head and shoulder pattern, which you call head and shoulder. This is left shoulder, this is head, this is right shoulder. This is a butterfly pattern, and this is a Gertley pattern or bat pattern. It does the same thing here, but the opposite direction, right? It's it's like I don't know what you call it, congruent or something. And then you followed by wave C. Okay, so if you keep in mind, life becomes very easy. Believe me or not, market doesn't do anything else. Okay, and if it does, leave it alone. Find where you can find these things and trade that. That's it, simple as that. Okay, so actually, this is not the chart that I wanted to show you, but maybe see 1, 2, 3, 4, 5, A, B, and now. This is how you do it, A, B, and then you see before it's coming down, wave C is supposed to be in 5 waves, right? So wave 1 will come to the trend line, bounce wave 2, and if it doesn't go higher than that, then short the damn thing right there. It's going to break the TL and drop. Okay. And the one I wanted to show where it is. It's not there. Maybe it's in Elliott wave. There we go. I messed it up, I guess. No. Oh, anyway, let's see from there. Maybe a next. Okay, this is I'll cover this on the next. How step by step. Wave 1, wave 2, what to look for, how it goes, and then how to get into wave 3. Big trade, and wave 4, wave 5. See the measurement and all that. The wave 1, wave 2, the channel. It always breaks up above the channel. Wave 3, and usually it's 1.618 of wave 1, then wave 4, and then wave 5. Okay, so this is how Elliott wave within channel, how it goes. So this is just a basic. This is like wave 1, 2, 3, 4, 5, ABC coming down. Okay, so hope I have taught you something today, and this is worth something. I don't know. So you're still in that trade. You hold that trade, John. You held it over the weekend. Euro Aussie. Okay, you might see retrace on you, bro, because it dropped big time, all the way to the downside right now. But the problem is that Aussie index. I'm gonna cover tomorrow, all those indexes because the time is just 1 hour 15 minutes. I don't want to mess up the recording. I'll show you all the Aussie index is getting very, very powerful, man. Remember I told you last webinar that Aussie is gonna get strong, and Aussie is getting strong. very powerfully, and yeah, that will drive those Euro Aussie and Pound Aussie. Maybe not Pound Aussie because Pound is also getting strong, but Euro is in trouble. So Euro Aussie is the one to the downside still. But excuse me, I'll wait for the correction. Actually, I got out already. I got close all my trades. Now weekend very seldom I hold any trade, but I usually close. Who needs the headache, man? Close the damn thing. Enjoy your weekend, then come back again and see. Market always gives you the new trades. Yeah, weekend, you never know. Gap up, gap down. So it's just extra worry for nothing, and the risk too. Okay, so this is it for now. Hope it is any benefit to you guys. And you will learn. You just keep watching it. Sometimes it sounds like very tough. Believe me or not, when I started, I didn't even know what Elliott Wave is. So I'm in the same. I was in the same boat, and I started to learn little by little, all by myself. Okay, so this is it for now. Go out there and have the rest of the weekend. Enjoy, and talk to you guys tomorrow with the setups and everything. Bye for now. Talk to you guys tomorrow, okay?